Welcome back. Well, plenty of stocks to talk about and a lot of good numbers. So let's get straight to it. SBI reported its best asset quality in the last 8 years. So the street will definitely like that. Abhishek is here to give us the latest on all of that. Abhishek, morning.
Morning, Sonia. So a beat on our poll with respect to the fact that stress in the balance sheet has reduced massively. Asset quality, one of the best, as you mentioned, in last 8 years, coming in gross NPA ratio of 2.55% when compared to 2.76% in the previous quarter. The watch list is the lowest in last 13 quarters, coming in at 0.12% of the book. NCLT list is also one of the lowest in last 18 quarters, coming in at 5.2% of the loans versus 5.34% in the previous quarter. Even the restructured book is one of the lowest in last 12 quarters. International loan growth, that increased by 9% sequentially, one of the best growth rate that you are seeing in last 5 quarters. Now the loan growth, overall loan growth of 12.3% YOY and about 3.25% quarter on quarter, slightly better than analyst estimate of 12% YOY and 3% quarter on quarter. ROE continues to remain about 20%, which augurs well for SBI. In terms of their numbers, both the ANA and PAT is a beat on our poll. Back to you.
All right, thanks a lot for that. Well, the other stock that we're looking at this morning is InterGlobe Aviation. So just want to get straight to it. Very good set of numbers coming in from InterGlobe Aviation this time around. Across the board, actually, the numbers have looked good. The revenue growth has come in at almost 20%. There was a strong growth in the margins, as you can see on your screen. In Q2, the EBITDA margins are 16.4% compared to 1.8% same time last year. And the company has now reported a profitability of almost 189 crores compared to a big loss of 1,600 crores last time around. Now, if you look at the internals as well, the capacity of the company has gone up by almost 28%. It has been a very good quarter, seasonally. I mean, you can see it all around, right? The aviation space has just sort of blossomed in the last couple of quarters, come back in a big way. Passenger growth has been healthy, almost 35% passenger growth is what we saw this time. Yields, though, they declined for the company, down about 12.5%, but the load factor has improved for the company, up about 4.1%. The company also expects to increase their capacity further by 25% year on year in Q3. The only problem is the debt of the company has gone up. So the debt has risen by 20% year on year and now stands at a little under 50,000 crores. However, most brokerages are very upbeat with the improving numbers. If you look at UBS, they have a buy with the target price of 3,000 on the stock, well above the current market price. And Goldman Sachs as well has a buy with a target price of 2,700. So I'm going with green on that name.
And these numbers, Sonia, with oil where it is, right?
Yes.
I mean, which has been high, on the higher side in the quarter that we're talking about. Well, so that's a good set. Vedanta is the next one we want to talk about. Vivek has got details on the numbers here. Vivek, hi, morning.
Well, good morning. A complex set of results to pass through. But, what's actually happened is that the street was going in with muted expectations, but the company has managed to beat those expectations. Multiple one-offs, we'll take you through them. Top line, the revenues are higher by 6.5%, aided by a one-off of 6,400 crore. This is on account of favorable outcome of arbitration as far as the oil and gas segment is concerned. So the adjusted revenues lower by 6%. The adjusted EBITDA is down 8%, coming in over 7,079 crore. The EBITDA margins on a year-on-year basis have expanded over 220 basis points. On the bottom line front, or on the profitability front, there has been a net loss that has been reported of 915 crore. Two one-off items. Number one, an exceptional gain of over 1,200 crores. This is on reversing previous write-off as far as the oil and gas division is concerned. But the larger number that we need to keep an eye out for is the tax figure. The tax that the company has paid this time around is in excess of 9,000 crore, which was substantially higher as the overall tax was inflated by 6,100 crore, given the fact that the company has adopted a new tax regime. Segmentally, oil and gas reported EBITDA at 5,860 crore. The adjusted EBITDA of 1,470 crore is better than estimates. And lastly, talking about the aluminium EBITDA, 1,967 crore versus a Nuvama estimate of 1,747 crore. So both of these segments have done better than what analysts were anticipating.
Okay, thank you very much for that. Bank of Baroda also reported their numbers, a bit disappointing on the margin front. Abhishek joins in with the details. Abhishek.
Well, Rima, as you mentioned, the net interest margin has been a big disappointment for Bank of Baroda, given the fact that it's perhaps the only PSU banks, large cap PSU banks, which has actually lost 46 basis points on net interest margin in the last 2 quarters. So the net interest margin is a decline of 20 basis points quarter on quarter. Q1, it was about 26 basis points quarter on quarter. Net interest margin guidance for FY24 has been cut to about 3.15%, plus or minus 5 basis points is what the management has mentioned. This was was earlier estimated at 3.3% in terms of FY24 net interest margin. Slippages have increased to 4,751 crores versus 2,761 crore. This was on account of, one of the aviation sector, which contributed to about 1,774 crore in a single account in aviation sector. So asset quality continues to improve. That is on the account of write-off being on the higher side. Gross NPA ratio is one of the best in last 34 quarters, coming in at 3.32% versus 3.51% in the previous quarter. Annualized credit cost on account of the one-off slippages that they have had is at 6-quarter high of about 0.9%, but remains well below the 1% level. CASA ratio, as you are seeing with the industry as well, that the CASA ratio is declining. It's now declined for Bank of Baroda as well and is below the 40% level for the first time in last 12 quarters, now at 39.9% versus 40.3% sequentially. So in terms of NII, it's below our poll. However, other income has aided the PAT this time around, beating our poll. Back to you.
Okay, thanks a lot for that. So that's on Bank of Baroda. But let's hop across to Vivek. He's tracking JSW Infra now. Vivek, over to you.
Well, that's right. It's a steady set of numbers from the company this time around. India's second largest port operator. Revenues higher by 28%, largely aided by cargo handle volumes up by 27% on a year-on-year basis. The reported EBITDA is up 32.5% and margins too have expanded 200 basis points for the company this time around. Profitability higher by 85%, largely what the street was penciling in given the management commentary post the IPO. Two very interesting acquisitions. Number one is outside of India, the Fujairah Port Terminal, the current capacity utilization of 95% at this particular port, and the company has paid a total enterprise value of $187 million, which values this particular terminal at 8.5 to 9.5 times EV to EBITDA as far as FY24 is concerned. Interesting acquisition there. And the second one, the company has gone ahead and acquired a cargo terminal operator license, and this is from Sickle Logistics. So another interesting acquisition. The management will join us later and we'll quiz them more on these two acquisitions.
All right, that's the second largest private ports operator. Vivek, thanks very much for that. And as you said, we'll hear from the management in a bit from now. PB Fintech. I mean, Zomato, we will talk about more. The reported numbers on Friday and numbers were good. PB Fintech reported numbers as well. Surabhi's here with how they looked. Surabhi, morning.
Good morning. So, it was a strong top-line growth, but the profitability has deteriorated on a sequential basis. So, the revenues were up 42% on a year-on-year basis, and the growth is coming from both Policy Bazaar and Paisa Bazaar, and the new initiatives that is growing at over 30% on a year-on-year basis. Now, the adjusted EBITDA profit was at 13 crores versus a loss of 53 crores same time last year, but the Q1 profit was 23 crores. So, losses have EBITDA profit has gone down sequentially. Adjusted EBITDA margin of 2%, and in Q1 it was 3%, so 100 basis points contraction there, and a net loss of 21 crores versus a loss of 187 crores in the same time last year, and Q1 losses of 12 crores. So losses have expanded sequentially. So good revenue growth, but profitability deteriorated on a sequential basis.
Okay, thanks a lot for that. Well, JK Cement is also what we're looking at this morning. Let's find out how the numbers were. Vivek, over to you.
Well, after the positive surprise delivered by JK Lakshmi Cement, last week, JK Cement too has surprised quite positively. Volume growth has been very strong for the company in Q2. So when you're talking about the sales volume, it's up 22%, amongst the best as far as the cement universe is concerned. The grey cement volumes too up 22% on a year-on-year basis. Revenues from operations up 23%, largely aided by volume growth and good price realization as well. Q2 FY24, revenues coming in at over 2,750 crores. Now, talking about the operating profit or the EBITDA, it's up 51% on a year-on-year basis, and on the back of that, EBITDA margins have expanded by 220 basis points. Profitability higher by 61%. This will be a stock to watch out for, going with a green on this particular name.
Okay, all right. Vivek, thank you very much for that. Well, we're talking about new age companies, and Delhivery is the next one, which is in focus. The stock is just about 10-15% away from its IPO price. It didn't fall as much as the others, and we got the second quarter numbers here as well. Mangalam, take it away.
Well, the second quarter numbers for Delhivery were soft, and that was expected largely on account of the shift that we saw in the festive season into the third quarter itself. And there has been a strong start, understandably, to the third quarter. So just to run you through the second quarter numbers, the revenues were absolutely flat quarter on quarter, close to around 1942 odd crores on the top line. The EBITDA was still loss-making, close to around 15.5 crores. And as a result of which, the company reported a net loss of 103 crores on the bottom line. But there are a few internals which will allow the stock to be supported at lower levels and perhaps recover from lows as well. The first one is that they're still having cash of almost 5,500 crores on their books. Their net working capital days have reduced from 38 to around 28 as well. And they've spoken about the third quarter volumes. October volumes are at 70 million plus parcels, and this compares with the second quarter volumes, the entire quarter, at around 181 million. And plus, they've got multiple order wins in the second quarter from existing and new clients, and they are expanding their network across all functions that the company operates in. So as a result of which, the stock opens lower, but from there, we see a swift recovery.
Okay, thank you very for that. So right shifting of the festive season has hurt delivery this time, but perhaps it will catch up on the numbers in Q3. Sonal is here for more on Aarti Industries. Sonal.
Thank you for that. Well, on a YY basis, it was understandably a weak quarter for Aarti Industries like the other chemical companies. But on a quarter-on-quarter basis, there's a surprising recovery which the street would like, considering that it's the only large specialty chemicals company to see a quarter-on-quarter recovery. Revenues on a YY basis down 14%, EBITDA down 13%, margins at 16%, leading to a profit decline of 27%. But the quarter-on-quarter recovery is something that is a positive, because then the revenues are up 3% on a sequential basis. EBITDA is up 16%. Margins are up 200 basis points, leading to a profit growth of around 28%. The call is at 4 p.m. today. We'll get in more details as to what the demand is looking like, but going with green on Aarti Industries for today. All right, going with green on Aarti Industries. Thanks a lot for that. Well, Upasana is also with us. She's going to tell us how Thermax's numbers looked this quarter around. Upasana, over to you.
Well, all in all, we are seeing a good set of numbers coming in from Thermax in its Q2 FY24. Talking about the revenue from operations, it saw an uptick of almost 11%. Other income saw an uptick of almost 65% at 66 crores. And EBITDA stood at 231 crores with an uptick of almost 59%. Talking about the margins, the EBITDA margin saw an expansion of 300% from 7% to 10%. In terms of PAT, it stood at 158 crores with an uptick of almost 45% on 1Y basis. And order book also saw an uptick of 8% at 10,264 crores. Well, talking about the segmental revenue, the industrial segment clearly outshined with a revenue uptick of 18% at 989 crores, and EBITDA margins for this segment expanded from 7.8% to 10% on the back of stabilized commodity cost is what the company has stated. So all in all, we are seeing a good set of numbers coming in from Thermax in its Q2 FY24.
Okay, all right. Thanks a lot for that, Upasana, and thanks to our entire team. Here's a quick recap of our top stocks with positive news flow. There's SBI, InterGlobe Aviation, Vedanta, JSW Infra, JK Cement, Aarti Industries and Thermax, while stocks with negative news flow, there's Bank of Baroda, PB Fintech as well as Delhivery. But there's also lots happening in the world of commodities. Manisha Gupta is joining in for a roundup of all the action there. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, the US dollar and the Treasury slipping post the weak US jobs data that we saw come in on Friday. There is some support that you've seen in crude and in metals as well. The crude oil prices have edged higher. We did see prices post a 6% decline in the previous week, but this week, pardon me, has started on a positive note. Same is the case with metals, 3 to 4% on the higher side, week-on-week basis.
Okay, all right. Manisha, thanks very much for that. We'll take a very quick commercial break here. Prakash Devan will join in. We'll sort of toss to him some of these earnings which have come through and how stocks should react. We also will have the management of Aeroflex Industries to talk about their second quarter earnings. Stay tuned.